Do stocks make sense for income investors? I came across this the other day from Lord Abbott. It's a little bit dated, 2014. Hopefully they'll have a update on this. It's been 6 years now, right? No, five and a half years. It's fantastic. So, in addition to the prospects of attractive current income, dividends also offer investors the potential for solid income growth. I've been on a dividend kick basically my whole career, but in the last couple of weeks, I've been talking a lot about dividends, and here's why. Chart 1, dividends historically provided more income than bonds on the same invested amount. Annual dividend income of the S&P 500 and interest income from the aggregate on a $10,000 invested in the respective indexes from 1976 to 2013. So the Barclays bond index was giving you on $10,000 $745 of income. The final year, well, you got 700. They're only because it matures at some point. But anyway, at the end of the day, you're still getting $745 of income after, or I guess annual income. They're just saying the Barclays bond index. They're not even buying a bond and letting it mature. They're just buying the whole index, and they're saying the income goes up, the income goes down. So here is the income in the Barclays bond index is 745. Then it goes to about 1,200. Then it starts going down, 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 down. So look at that. That's freaking crazy. So I was 45 years ago, roughly. I guess this would be a 40-year time frame, roughly. Yeah, so $745 where the income off the S&P 500 was only $461. The income off the bond started going up until about 82, and then it leveled off there, and then it's just been a freaking... Man, it's just gone down like a brick in water ever since. I mean, look at that. I guess that's probably the max, like I said, about 1,200. And at the end of 2013, it was only 272, and it's significantly less than that now for sure. Yet the dividend on the S&P 500 started at 461, and just in 1986, just 10 years later, it finally overtook that of the end of the Barclays index. Now it's, $4,000 a final year income versus $272, and the ending portfolio value of the Barclays index is only $10,952, where the ending portfolio value of the stock, the S&P 500, is $204,000. That's without reinvesting income, by the way. Crazy, man. And there you go. You start with $10,000. 40 years later, it matures at $10,952, and that's however they do it. You got a little bit of a capital gain in there because the interest rate's gone down, but that's just validating exactly what I've said all the time. Your index, your bonds will give you only income, no appreciation, no capital appreciation. They will only give you income. And so it starts with $10,000. It went up by, it was at 1%. That's like 1% in terms of appreciation. The only reason for that is because the interest rates are so far down over the course of 40 years, roughly. Crazy. Even as nominal dividend yields stayed flat, S&P 500 dividend income continued to rise. Annual yield on $10,000 invested in the S&P 500 in 1976 versus nominal dividend yield on index 1976 to 2013. So the yield on 1976 cost was right here. That's about roughly 5%, right? The yield on calendar year yield is this green. You're getting $500 there. But then look at the yield on cost here. Look at that. It's like 2.5, something like that. But the actual yield that you're getting relative to your yield on your calendar year yield. That's what I'm trying to say. So your calendar year yield, say that 5 times fast, is roughly 4.8% right here in 1976. Nope. Fast forward until 2013, your yield is 2.2, but your actual yield that you're getting is on dividends is 40% your yield on cost versus the yield that you're getting from an income a dividend perspective is 2. Man, that's just incredible. Anyway, I'll put a link in the show notes. This is fantastic stuff. Again, if you want income, you've got to be a dividend investor. All right, we'll see ya.